Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Sunday morning, and that means we're going to learn a little bit about what's going on in the stock market. We're going to take a deeper look into a newsletter that I get every weekend. But before we do that, let's welcome Mr. Dan Bird to the show. How you doing, buddy?
I'm doing great. How are you?
I'm doing awesome, man. So the floor is yours. Talk about this strategy that you put out in your recent newsletter.
Yeah. So one thing that I've known about this, but I actually saw a very interesting presentation by a hedge fund manager that's been doing it for a long time, and how he uses this particular strategy.
Okay.
And then I'll show how I'm going to use it as well.
All right.
Let's see here. Let me share my screen.
Okay.
I'll show a few things. Then we can talk about some of your stocks.
Mm-hmm.
First off, let me bring my newsletter. This is the actual newsletter. This is halfway through it, so I'm going to talk about his strategy. But what he does and what I do is use the RSI, the Relative Strength Index.
Okay.
And Relative Strength Index helps you understand oversold and overbought conditions. And I say right here, in an oscillating market like we're likely to have for the next year or so, maybe 18 months, it's an ideal tool. So it's something that people should learn if they want to be active traders. This is an active trading strategy. So it's not the kind of thing to buy and hold. But if you want to do short-term trades and anywhere from a week to a month, then this is a great strategy to use, and it works really well in markets that go up and down. So it doesn't work so well in what we had since the COVID crash, because the markets just went straight up, right?
Yeah.
It was a trending market.
Yeah.
But in an oscillating market, it actually works pretty well.
Okay.
So the idea is to identify strong stocks and then use the RSI. When the RSI goes below 30, that means that they're oversold.
Okay.
That means there's too much selling, right?
Mm-hmm.
And buy it when it starts to rise from below 30.
Interesting.
So what do we mean by strong stocks? Well, his idea, he's got a slightly different idea than I do, but I think it's a very interesting concept. So what I've done for identifying strong stocks is every weekend, one of the things that I do is I pull all the stocks in these categories here, and I combine them all into a single chart list.
Okay.
And then I run a scan against it. I'm going to show you what the scan looks like.
Okay.
So I use the Investors Business Daily Top 50. I use the VectorVest Top 100 stocks. So the top 50 are the top 50 stocks in all of the Investors Business Daily universe.
Okay.
VectorVest has 9,000 stocks in its universe. So it's the top 100 out of 9,000. And then Earnings Beats, which is done by Tom Bowley. I just showed you his blog. He puts together every week, he shows stocks with strong recent earnings. So what were their earnings in the last earnings report?
Yep.
What are they projecting for future earnings? So he only identifies stocks with strong future earnings. Which ones have just raised guidance? And he will only include the ones that have raised guidance and have strong earnings. And then finally, the strong accumulation distribution line. Accumulation distribution helps you understand what the big institutions are doing. When they're accumulating, it takes them weeks and months to start a position. That's when they accumulate and buy. It could take them months to do that. And when they get ready to get out of a position, it takes them weeks to months to get rid of their stock. That's when they distribute. This line can help you see what those big institutions are doing. So these are stocks that have a strong accumulation line, meaning big institutions are buying the stock. Okay. And then finally, the last one is the NDX 100, the NASDAQ 100. Got it. So those are the groups that I use 500,000 shares per day as my criteria. Okay. So this is stock charts. They have a chart school. And again, if you can join this for free and you can learn about all of this different stuff, you can learn about technical training and candles, and it's limitless what you can learn on stockcharts.com. Okay. But this explains what the RSI is, Relative Strength Index. So it actually gives you the calculation, how it's calculated. It's the strength relative to the rest of the market of that individual stock. Shows you the parameters, whether it's overbought or oversold. So when it gets to 70, it's overbought. That means too many people have bought it. When it gets below 30, then it's oversold, meaning too many people have sold it. But if you have a strong stock that's oversold, that's an ideal time to buy. Got it. Right? Here's an example on this particular one. This is McDonald's. It hit below 30 right here. And then the stock was selling off. And then it started going back up again. I'm going to show you some examples from that hedge fund, that webinar that I watched.
Okay.
So again, this is overbought and oversold. Divergences are also important. This is something that I always look for. You don't always find them. But on the RSI, you see the RSI here is sloping down at the same time that the price is sloping up.
Interesting.
That means price is going up, but the relative strength is starting to wane. That means even though the stock is making new highs, it's doing it on slower and slower momentum. It's doing it on fewer and fewer buyers.
Got it.
It can't sustain that. So this usually happens just before a change in direction. You can see it here. This is a negative divergence.
Yep.
And down here is a positive or bullish divergence. This is where the stock continues making lows.
Yep.
So it's hitting lower lows. But the RSI, the relative strength, is starting to move up. That's accumulation.
Yeah.
That's big institutions saying, I think eBay is a good company. So as it's hitting new lows, I want to build a position. Remember, they can't do that immediately. They have to do it over weeks or months. In this case, it was almost 2 months that they had to build that position. And you can see them building it here with the RSI.
Got it. Okay.
And then it just took off. This is something on, this is Investopedia using hammers. It's another thing that I use in identifying potential. A hammer candle usually happens at the bottom. You can see an example right here. And this is what happened in the market on Thursday. Market sold off and then came all the way back.
Yep, it did.
And created a hammer. That's usually a really good indication of a change in direction. There's an example right here. So I use that in my scans as well.
Okay.
So the first scan that I want to show, this is actually the downtrend IBD 50, the 8 moving average crossing the 21. You can see what my scan looks like down here. It's kind of small, but it's all US stocks using a favorites list, which is the IBD 50. It's looking for volume of more than 200,000 per day.
Okay.
It's looking for the 8 moving average to cross the 21 from the bottom to the top.
Yep. And
then it ranks it by sector, which is a technical ranking.
Okay.
So these are the ones that have delivered.
Interesting.
These 5 stocks. And what I can do now is I can move those into another list, and then I can work with it. So I can look for the percent change, and I can see Car Gurus is the one that went up the most, right? I can also look at what I call candle glance, where I can look at all of these together, and I can kind of compare them all. You can see Car Gurus here just screamed higher.
Yeah, it did.
Right?
Yep.
But all of these, Cleveland Cliffs, it not only broke out, but it broke above its 50-day moving average. This one went above its 50-day moving average, which is actually what this particular screen does.
Right.
This is actually the 8 going above the 21, but that usually happens just before it goes above the 50. Nice. So Fortinet is another one. So these are all good candidates right here.
Interesting.
All right. But for the screen that I'm using for that RSI, and first let me show you the presentation that this guy did that I thought was really interesting. This is kind of his credentials. In 2001, he turned 585K into 800 million. 2008, he did it again using this strategy, turned 60 million into 250 million. Right now, he's extracting 3,500, 1,100% now. Keep in mind, these are annualized gains.
Yeah.
So that means he might have made, well, I'll show you what he can do in a couple of days, but these are annualized gains. So keep in mind, he's selling something.
Yeah.
So he's going to show you the best stuff.
Yeah, of course.
He's not going to show you the bad stuff.
He's not going to show you when he lost 4,000%.
Not going to show you when he lost. He did say that he's lost a few times, but he also showed his win rate, which was 80%, which is actually a really good win rate.
Yeah, I mean,
and I know the strategy is actually a good one if you do it correctly. And one thing really important about technical trading is that you can't rely on one particular indicator. You have to look at a confluence of the evidence, right? But here's one for Target. Down here, you can see it went below 30. The RSI went below 30 and had 5% gain in 14 days. 133% annualized. If you can do this every 14 days at 5%.
Yep.
Here's Dick's Sporting Good, 8% in 2 days. Again, important thing is the RSI going below 30 down here, starting to move back up.
Got it.
This here is Virgin Galactic. Again, the RSI went below 30 and started to move back up 10% in 1 day. In this particular strategy, he sold puts. We won't get into what that means. Maybe another session later.
Maybe.
If you want to, I can explain how options works. But in this case, he sold puts and in 1 day made 10%. Estee Lauder, same type of thing, 460% in 7 weeks. So this is an example of how it works. With my scan, this is my scan for this particular strategy. And very quickly, I'll walk through it. So it's stocks with the 20-day volume more than 500,000 shares. So I want stocks that are very liquid, selling more than 500,000 a day. And volume for today is more than 500,000. US stocks, I don't want ETFs. All right, so the favorites list, there's a bunch of favorites lists here that I showed you before, the IBD 50, the Spectre S 100, the NASDAQ 100, all of those things are these favorites lists. Every week I extract those and I put them into stock charts into this list so that I can do a scan on all of them at once. Okay. And then I'm looking for the RSI for today is less than 29. And the RSI for yesterday is less than 30. This is greater than 29 for today, less than 30 for yesterday.
Oh, I got you. Okay.
Which means it's just below 30, but it's starting to move back up. And it has a hammer either today or yesterday's. Now, the reason I put yesterday in is because there were a lot of hammers that happened on Thursday.
For sure.
A lot of stocks sold off and came all the way back again. All right. So I ran the scan, and these are the stocks that it produced. These are the ones that are candidates for this RSI strategy. Notice some of the names here. Look at Facebook and PayPal.
Yeah.
Now, they've been killed lately.
Yeah, they
right?
Yep.
Those are the kind of stocks that you want. You want stocks that are strong companies that have sold off dramatically and are beginning to turn back around. Here's Pfizer. Pfizer is another one. Really good stock. Now I can move these to another list and I can play with it. And what I'm going to do in this case is I'm going to look at these as a chart book so you can actually see the whole chart. So here's Biogen. That's okay. And this is what I do. I just go through them and say, all right, here's CVB Financial. Look at that hammer. See the hammer right there?
I do, yes.
So that had a hammer. In this case, the RSI did not go below 30, but this was a hammer. It was starting to take off again. The next one is CVS. Now, this one didn't go below 30 either on the RSI. The RSI is this green one up here. But it did have a hammer on Thursday.
Yep.
And it hit support. CVS is a very strong stock. You can see how it's staying really above most of its moving averages all the way through here. So this is a good candidate. This one may go up for the next couple of days. So that's a good candidate for the strategy. Here's East West Bank. Here's Facebook. So look at how much Facebook has sold off.
Yeah.
And this one does show you right up here. See the green? You can just barely see it going above 30.
Interesting.
You see that?
Yep.
This is the accumulation distribution line. It's not back above the moving average, but it's starting to move higher. Yeah. All of the other indicators right down here are bottoming and moving higher. So this one's a good candidate.
Interesting.
Here's Fluor. This was a hammer on Fluor. That one looks pretty good. This one is FNB Corporation. That's a hammer. There's a lot of hammers last week. Here's Gilead. This is the RSI strategy. So it went just a little bit above 30, but I don't see it really doing much down here yet.
Yeah.
So I probably would pass on this one. I want to get to Pfizer. I mean, not Pfizer, but Pfizer.
Okay.
Invitation Homes. This is another one that looks pretty good. Invitation Homes. This one here went below 30 and came back strong with the RSI. So it came back on Friday and actually closed at the high, which means people weren't done buying it yet. You'll see the accumulation distribution is now moving above its moving average line.
Yep.
So this is a home builder. Here's Lowe's. Here's medical properties. This is a REIT. Bank shares, One Oak. This is this actually overall, the chart looks pretty healthy. So this one's getting ready to actually break out the new highs up here. And this was a hammer. Pinduo, here's Pfizer. All right, so look at Pfizer. Pfizer is an RSI strategy. So you went above the 30 on the RSI. All the other indicators are starting to go up. It never really went below on the accumulation distribution.
Interesting.
Even through this whole sell-off. That tells me that institutions were loving that it was selling off because they were continuing to buy it.
Interesting.
And this is starting to turn up. It bounced off the 200-day moving average, which is an important support line. Again, that's what the algorithms look for. And the RSI went above 30. This one, I think, is probably one of the best candidates in this whole list.
Interesting. Okay.
Pfizer went up almost 4% on Friday. Now, keep in mind, like I said before, this is a short-term trading strategy. But what you want is a couple of days, a week, 2 weeks, depending on what the rest of the market is doing. If you can get 5% or so out of this,
done.
And you can do this consistently every week, 5% a week, how many weeks would it take to double your money? 72 divided by 5.
What's that? 12?
Take you 14 weeks.
14. Okay. Yeah, not
So,
bad.
a little more than 3 months to double your money at 5% a week.
Woohoo!
Here's PayPal. PayPal is one that, I mean, I've had questions, even folks that join my newsletter from your channel.
Yeah.
So what about PayPal? PayPal looks pretty good. Somebody asked me that way back here.
Yeah.
I said, yeah, but it's not ready yet.
Right.
You're gambling. It might work out well because it's sold off so much, but it really hasn't shown any signs of turning around yet. So it's really a gamble. But now look at what's happened.
Yeah.
The RSI has gone up. Now the RSI went up here too, and it did take off. You know, it went from 130 up to about 160.
Yeah. Then bad earnings. Yeah.
I mean, if you can get $30 out of a stock in a week,
yeah,
I'd take it.
Very cool.
So
okay.
PayPal actually now looks like it might be ready to go.
Okay.
And you can see the accumulation distribution is starting to move up as well. So that's the strategy. That's how it works. That's how I play it. I've created some daily scans. You can do this in stock charts. You probably need the paid version to do it well. But you see, I have an RSI buy strategy, RSI rising with best chartless.
Yeah.
So when I run that, these are all the ones that I just showed you.
Yeah.
But I can run this every day, and every day it's going to give me a new list.
Very, very cool.
And
well, Dan, there's so much in here. Let's give your email or your email address one more time.
And I explained the strategy in this past week's newsletter too, by the way. So anybody that sends me a note, I'll send them last week's. Yeah,
folks, you need to get this. If you're listening on the podcast, it is breakpointtrading@gmail.com. He puts this together every weekend, and he's my Sunday guest, so we can talk about what's going on in the market. Dan, thank you very much.
Did you want to look at a couple real quick?
We'll talk about that offline.
Okay, sounds good.
Thanks, buddy.